Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the money moves big companies try to hide in plain sight. Today we're diving into Devon Energy's latest report, and let me tell you, it has got more twists and turns than a new oil well bore. Before we drill down, if you are here for the real story behind the corporate jargon, smash that subscribe button. And hey, we've got a thriving community over on Discord sharing insights like these daily, link in the description. So Devon Energy, they've dropped their quarterly report, and it is giving us a snapshot of how they're doing in the third quarter of 2025 and the first 9 months of the year. Think of it as their financial checkup, and we're here to read the doctor's notes. Devon is a pretty big player in the oil and gas world, and their stock trades on the New York Stock Exchange under the ticker DBN. This report is basically them telling the world, and more importantly, the investors, what is been happening financially. Let's cut straight to the chase, the earnings. For the third quarter of 2025, Devon reported net earnings attributable to Devon of $687 million. That sounds like a lot, and it is, but it is actually a bit less than the $812 million they made in the same period last year. Now, where does that money come from? Their main game is selling oil, gas, and natural gas liquids. For the third quarter of 2025, they brought in a hefty $2.8 billion from these sales. That is up from the $2.6 billion last year, so they're selling more. But it is not just about pumping oil. They also have marketing and midstream operations, which means they're involved in moving and selling these resources. This brought in another $1.4 billion in the third quarter of 2025, a nice bump up from $1.1 billion last year. Of course, it costs money to make money. Their production expenses, which include things like labor, equipment, and extracting the oil and gas, were $895 million in the third quarter. That is higher than last year's $763 million, which makes sense as they're producing more. And then there is depreciation, depletion, and amortization. Think of this as accounting for the fact that oil wells are like batteries. They eventually run out. This cost was $879 million for the quarter. So all those revenues and costs add up. The bottom line for the third quarter of 2025 was $687 million in net earnings for Devon. That is a slight dip from $812 million the previous year. For the first 9 months of the year, their earnings were $2.08 billion, down from $2.25 billion in the same period last year. A bit of a mixed bag, but still a lot of money. Now let's look at what they own and owe. This is the balance sheet, and it gives us a snapshot at a specific point in time. As of the 30th of September 2025, Devon had total assets of $31.2 billion. That is up from $30.5 billion at the end of 2024. A big chunk of their assets is tied up in stuff like accounts receivable, which is money owed to them by customers, about $1.8 billion. Inventory, which is the NGLs and refined products they have on hand, was $361 million. But the biggest asset by far is their oil and gas property and equipment. This massive chunk is valued at almost $23.6 billion. This is the actual land, the wells, the pipelines they own. On the other side of the balance sheet, we have liabilities. Their long-term debt was about $7.4 billion. That is down from $8.4 billion at the end of last year. This is good, it means they're paying down what they owe. And for the owners, the shareholders, their total equity was just over $15.3 billion. This is essentially what is left after you subtract all the debts from all the assets. Okay, so how is the cash actually flowing? Cash from operating activities for the third quarter was $1.69 billion. That is a healthy number, slightly up from last year. This is basically the cash generated from their core business operations. But remember, oil and gas isn't a business you can just let sit. You have to keep investing. Their capital expenditures, meaning the money spent on new wells, equipment, and exploration, were $870 million in the third quarter. That is pretty consistent with last year. And they're still buying things. They spent $197 million on acquisitions of property and equipment in the third quarter. Looking at the 9-month period, this number was a staggering $3.7 billion. That big number likely relates to that big acquisition we'll talk about. Financing activities, that is where debt and stock buybacks come in. In the third quarter of 2025, cash from financing activities was negative $1.1 billion. This is mainly because they paid down debt and bought back their own stock. Speaking of buying back stock, they spent $250 million on that in the third quarter. And for the first 9 months of the year, it is a total of $800 million. They're actively reducing the number of shares out there, which can boost earnings per share for the remaining shareholders. They also paid out $151 million in dividends to shareholders in the third quarter. It is clear they're focused on returning cash to investors. Now, the big story here is that acquisition of the Williston Basin business from Grayson Mill back in September 2024. This was a huge deal, costing around $5 billion. They paid for it with $3.5 billion in cash and about 37.3 million shares of their own stock. This acquisition is a major reason for the increased capital expenditures, and it is really changing the scale of their operations. Looking at revenue breakdown, oil sales are their biggest chunk, bringing in $2.2 billion in the third quarter for 2025. Gas is a smaller piece at $186 million and NGLS at another $356 million. But remember that marketing and midstream business, that's also a huge revenue driver, adding another $1.4 billion. Devon has access to a $3 billion credit line, and as of the 30th of September 2025, they had not borrowed anything on it. That is a good sign, showing they have strong cash flow and plenty of flexibility. They also have a $2 billion term loan that they borrowed $1 billion from to help with that big acquisition. Overall, their total debt is around $8.4 billion, which is down from $8.8 billion at the end of last year. This is a positive trend, showing they are managing their debt load responsibly. And speaking of returning value, they are aggressively buying back their own stock. They've authorized a $5 billion share repurchase program, and as of the end of the third quarter of 2025, they had already bought back over $4.1 billion worth of their shares. That is a lot of commitment to shareholders. Looking at their equity section, it is interesting to see how stock repurchases reduce the amount of outstanding shares. They keep buying back shares, which is a common strategy to boost earnings per S-share for the remaining investors. Alright, so what is the big picture here? Devon Energy is a solid company with strong operational performance. Especially in their core areas like the Delaware Basin, they're generating a lot of cash, paying down debt, and actively returning value to shareholders through dividends and massive stock buybacks. The Grayson Mill acquisition looks like a strategic move to increase their scale and profitability. However, no company is without its risks. The energy market is notoriously volatile, and even with their hedging strategies, significant drops in oil and gas prices could impact their earnings. They also face ongoing regulatory and environmental challenges, which are a standard part of the oil and gas industry. Overall, Devon Energy appears to be navigating the complex energy landscape with a clear strategy focused on efficiency and shareholder returns. They're leveraging their strong asset base and actively managing their finances. It is a company that is definitely worth keeping an eye on. Alright, that is our breakdown of Devon Energy's latest financial report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.